Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. Listen, today I got a great video for you. It's going to be short, it's going to be to the point, and it's something that you need to pay attention to. Okay, if it's your first time tuning into me, welcome. It's your first time meeting Marcel Profits and being on this page, welcome, right? If this video is helpful by the end, do me a favor and hit that subscribe button. For all those watching, hit the like and drop any comments with questions or concerns or statements that you may have. Now let's get into it. All right. Now, today, right, November 10th, we have gapped up in the market, right? And it's as expected, right? Friday, we had, failed two downs. We had a bunch of bounces, right? If you use the strap method, we had a ton of bounces, and we all knew that it was going to be a pop today. Now, I want to get you guys to understand something. A lot of times in the market, things are not super obvious, and it's for good reason. Because if the obvious thing that you learned in your trading course or your YouTube videos that you watch always worked, then everybody would be rich, right? So I want to bring your attention to something. I got Palantir pulled up, and it's something that I want you guys to really think about. Okay. Now, even though, let me pop to the daily first. So just to refresh what I said, I'm gonna make this larger too, so you guys can see it. I really want y'all to pay attention. Like pull out a notebook, right? It's one of my trading journals. Pull out a pen and really take notes on this. Okay. Now, on Friday, we had the failed two down. If you're using the strap method, right? This candle right here is a failed two down. That typically means that there is a reversal on the horizon, and a pretty strong one. If you just go and look at, failed two downs, across the map, you will see that usually when there was like some sort of failed two down, it was a reversal. Right here, it went up. Let's see if we can find some more. Not a ton on Palantir on the daily. But yeah, when you see a failed two down, it's typically a reversal. So we had a strong one right here. It was a failed two down and reversal on, let's see, like the fourth touch. So extremely strong support, right? So a lot of people were like, man, this is great. Like we came down long enough, right? I'm gonna go measure it out. The decline was from 207 to 168. So we saw a 19% drop, almost bear market territory. But again, the market, when we talk about 20% down, we're talking about more so like SPY, the market at large. This is not, it's not necessarily the same thing with individual stocks. It's more so for indexes. But this saw a 19% decline. So a lot of people are just like, oh, wow, that's crazy. So at the first sight of a reversal, they're like, okay, that must be the bottom. Now, I want you guys to understand something. I'm going to flip to the weekly. There's a lot of things saying that it ain't done. There's a lot of things saying that it ain't done that's not so obvious. Like I said, most people will not look at the monthly and they won't look at the weekly when they're making decisions. And then they wonder why things get blown up. Now, the way that time frames work is that the higher the time frame, the more potent the information. The lower the time frame, it's the more random, more diluted the information. So it's like the game of telephone. I've mentioned this in a video in the past. It's like the game of telephone. I don't know if y'all remember when we were younger. Well, this is to anybody that's watching that's 30 and older, right? Let's just put it that way. There was a time where like the internet didn't exist in the way that it exists now, and you had to go and dial up to get onto the internet, and you didn't have the internet on your phone, and you had to like actually go outside to meet people. And one of the games that we played when we went outside to meet people was a game called Telephone, right? And Telephone was basically where you would whisper something in somebody's ear, and then they would take what they heard, and then they would go and whisper it in somebody else's ear. And by the time it got around to like 10, 15 people, what was originally said would wind up being like somewhat what was said. It wasn't the full actual, original sentence or word or whatever, or phrase that was used. It got diluted. So it's the same with the market. The lower in the time frames, it's like, yeah, it'll be some of the truth will be there. Like what you're seeing could get you like a little 10, 20% move maybe based on something you're seeing on the 5 minute, but it's not going to get you the huge moves that watching something on the weekly or the monthly is going to get you when we're talking about swings. Okay. So let's bring it back to the charts, right? I don't want to go too far off on a tangent. We got a 3 down, which is also a major engulfing of the previous week. This week, today is Monday, so we already have an inside candle, right? This one candle, which could go one of two ways, right? Now, it could blast off, right? That's always a possibility. You never know what type of stimulus, right? Like Donald Trump talking about giving people $2,000. So something like that could really stimulate the economy. We could see crypto go crazy. We could see the stock market go crazy and then, break above highs, which is at 207 and make a run that, like nobody's business. But that's what I think most people want and are expecting. What I think is more likely is that this week we don't forget about what happened last week. We had a bullish day. We had Friday, which was a major bounce, but it wasn't that big of a bounce because the week is still bearish, right? It's like it's like somebody do you dirty 4 days out the week, but then they come with roses on the 5th day. You know what I mean? Like you ever been, somebody just 4 days in a row, you a piece of shit. 5th day, they try to make it up. It's a little too late. That's how I'm seeing this, right? That last bounce was just like a little bit of hope. If we can stay inside of this 3 candle right here, right? If this stays inside of this all week, do you know what that is? That would be a bearish harami, guys. That would be a bearish harami, right? That would be a bearish harami at the end of an up move, right? The end of an up move. This could send the stock crashing down, like breaking clean through this order block right here and possibly lower, right? Maybe here. I know that sounds crazy. But what I'm trying to get you guys to understand is that just because we have a strong day and like a little bit of good news, it doesn't eradicate or eliminate what is kind of already making its way into the market. These weeklies are powerful. Go back and look at the weekly chart and read them like you would read a lower time frame and understand that the reason that it seems like it's not doing that is because more time has to go by for the full pattern to form. So if you're seeing a bearish engulfing on the weekly, what makes it any different than you seeing it on the daily? If you saw a bearish engulfing on the daily, you wouldn't be bullish. You'd be looking for put entries. All right. So I want y'all to really pay attention to that. I'm going to go to another one, right? Because it's not just that, right? Hood is the same way. We got the bearish engulfing on the weekly and we're inside of it. We gapped up, right? We gapped up. It's not going to show the gaps on the weekly, but on the daily, you'll see the gaps. Those gaps got to get filled. That's typically not healthy when you gap up coming off of a reversal. A healthy reversal would have a filled gap or wouldn't gap at all and then go to the upside. So this could come and fill the gap and then pop to the upside. That will be a little bit healthier, but there's still a lot of gaps to the downside on a lot of these stocks that I believe are going to get filled pretty soon. Let's go to another one. Let's go to SPY. Right, so this is the actual market, right, on the weekly. Bearish engulfing. We're inside of it, right? Could be coming off, could be a bearish engulfing into a bearish harami, bringing it down to here and possibly down here to the first hint of a correction, right? The reason that I'm telling you this is because I know there's so many people on the internet. I'm gonna cut this off right now. There's so many people on the internet, right, on YouTube, some of your favorites right? That are constantly like, get in this stock, it's going to make you $1 million. Get in this play, it's going to, all this clickbait. Get in this, is going to change your life. Get in this stock. But stocks do not go up forever. The best stocks do not go up forever, and they do get exhausted. There is something called supply and demand. There is something called a macroeconomic state or status, right? There are real things happening out in the real world that don't necessarily call for a much higher market. And if we do get lucky with some sort of, like I said, fake hope, it will be the truth revealed at some point. But like I said, when I'm looking at technicals on a broader time frame, the weekly, it's not looking bullish to me. We are in a bullish market for sure. This is definitely a bull market, but I believe that the tide is going to start turning sooner than people think. All right, so I don't want y'all to get caught up in that. I always want you to watch for it. Again, like I said, I'm not a person that's trying to act like I got a crystal ball, right? I'm not trying to act like I can predict the future. I'm showing you the likely scenarios so that you can watch out for it without blindly getting into plays just because somebody says you need to get a bunch of these. A lot of people are not calling the levels. They're not letting you know that, hey, this could go wrong. Anytime somebody gives you a play, they should be showing you the scenario of the downside too. Whenever you're making an investment, you need to know the risk. You need to know what could possibly go wrong whenever you're spending your hard-earned money on something. All right, I'm going to leave y'all with this. Notebook, journal, okay? Before, during, and after plays. You want to do this over time. I got notebooks for days filled up. I got tons of them filled up with notes. What this is doing is it's helping your instinct. It's helping your pattern recognition. It's helping you understand what's going on in the market. It's also giving you a reference point for when something similar takes place, right? Some things take years to repeat themselves, but if you have, like solid notes, right? Solid journal entries, you could always go back and be like, oh yeah, okay, I see. And like put the pieces together that way, right? I know it seems like an extra step, but again, like I said in my last video, we talking about practice. It's important. This is your craft. This is something that you're trying to get better at. This is something that you're trying to, change your life with, essentially, give yourself an income with. You got to just do the little small things. And it's those little small things that are going to separate you from the pack, right? The little small things are going to be what earns you a living. All right. Now, if you are looking for a trading home, the Prosperity Collective is the only way. We have been consistently making profits. We have been changing lives. And recently we've discovered, or not discovered, but we've put together, we've been new this, but we put together a package for you all, right? What we're going to do is show you how to earn an income from trading through a specific strategy in a specific manner, only needing $1,000. Okay. When you join the Prosperity Collective, not only will you have the course, right, which is 7 hours plus of walking you through options from beginning to intermediate, you will also have a strategy that you can deploy to bring in income. Now, I know a lot of you don't get raises often. Even if you are a high performer in your career, you're not getting the raise that you deserve. You're an expense on a spreadsheet, and you will always be treated as such. It is a fact. You are an expense on an income statement, and you will always be treated as such. The way that you get what is due to you and what you deserve is to be skillful, to be irreplaceable on and off the job. Now, we've created a way for you to earn $2,000 to $4,000 a month by simply just deploying $1,000. Okay, so if you have $1,000, you have the potential to add $24,000 to about $48,000 a year to your income. So if you're making $60,000, you now taking yourself to being a six-figure earner. Okay. Now, I won't oversimplify it. There is some work that you'll have to put in. You will have to understand and go through the course and get practice in. But we show you all of that. We walk you through it. And the goal is to get your money up. Like I said in the beginning of the video, I want a mission to make you some money. All right. Now, I'm signing off. I appreciate you guys. I love y'all. Remember, invest smart, live free. I'll see you in the next one. Peace.